Hello, EasyEquities community, and it's great to be chatting to you once again. End of the year, but many of us are pushing through. Consistency wins the day, and so there's still a lot happening at EasyEquities, and clearly with many companies in the market, including Tharisa, and we're delighted to be joined today by Phoevos Pouroulis, who is the CEO. Yeah, Phoevos, thanks for joining us. End of the year, taking the
Yeah,
time out to chat to us.
yeah. Thanks so much, Carl, and nice to be with you and your viewers today, and have the opportunity to share some insights for our year end.
You must be a little bit tired after your results, or you're invigorated after doing all the road shows and chatting to everybody.
It's always a great time of the year to be on a roadshow because people are generally in a good mood and looking forward to the year end. So yeah, feeling invigorated. It's always pleasing to put out a good set of results and positive trajectory, and we really feel like a confluence of a lot of effort coming together as we build to grow into the next chapter of our growth story. As you know, we're not a newly listed company. We've been on the JSE now. Going into our 12th year, and in London, 10 years next year. And the cyclicality of commodities brings with it its opportunities and challenges, but we're pleased that our business model has proven to be resilient through that cyclicality.
Absolutely. So maybe just, I mean, there are thousands of EasyEquities people that are and users that are shareholders in your company, but for those that are new and perhaps considering investing, maybe just
Sure.
a quick overview and what makes your portfolio different in this rather crowded resources space.
Yeah, absolutely. So I think what differentiates us is from the outset, the way in which we approach resources, and it talks to one of our pillars of our benevolent intent, which is redefining resources. So we started the Tharisa mine some 15 years ago, and we were the first miners in the Bushveld complex, which is the largest geological complex in South Africa, to propose the co-production of platinum group metals and chrome concentrates from the middle group reef horizons. Historically, they were only mined for chrome resources by the likes of Samancor and Glencore or Xstrata in those days. And so it was a complete novel approach to the resources. And what it did was it allowed us to unlock a large scale, low cost open pit mine, which we still operate some 15 years later. And the key here is that it positions us in the lowest cost quartile. And I always say that if you want to be in this game, you need to be in that quartile to survive the volatility of commodity prices outside of your control, obviously, but your cost structure generally can be in your control. And by the virtue of us deploying this co-production model, we've proven that over the last 11 years of being profitable, being a dividend payer for 9 years of those 11 years. And so it really is a resilient model where you've got two revenue streams, kind of counter-cyclical fundamentals around chrome and PGMs, but supporting, a single cost base. And it's really worked out well for us.
Hmm. So you've partly answered this because it was a great question from one of our users about your 2025 production story, which was pretty mixed. I mean, softer full year numbers, but a really strong, last quarter rebound in both chrome and PGMs. And for those like me, who are always not sure what those are, I mean, they're platinum group metals, right? So a cluster
Correct.
of six rare, valuable, and pretty chemically pretty similar metals. But maybe just to unpack a little bit more what operationally happened and what we can look and read into this, strong last quarter momentum.
Yeah, so I think first of all, we need to look at our mining volumes, which were up significantly year on year. We are an open pit, so we are subject to inclement weather. And living in Joburg, I think we've seen what our thunderstorms look like these days. So, having developed systems to dewater the open pit and to navigate lightning events and so forth has put us in a stronger position. So our mining up at 5.4 million tons, about 11% improvement year on year. And then in that fourth quarter, sort of hitting our strides for circa 40,000 ounces of PGMs and 140,000 tons of chrome, which is kind of our run rate that we like to achieve going forward. And so operationally, on a good footing going into the new financial year, I think supported very importantly by a buoyant platinum group metal basket. As you say, it contains those 6 elements: platinum, palladium, rhodium, and gold, the most well known. But the minor metals are playing such a key and important role, the iridiums and the rutheniums of the world, whether it's in autocatalysis or catalysis, or in memory storage, or glass manufacturing. There's a myriad of applications, and these are truly precious metals. And South Africa is endowed with more than 75% of the world's resources. So we're in a privileged position, and we have the benefit of being able to extract these commodities. So if you look at the pricing environment for the financial year, we were just over $1,600 for the basket. That's all 6 elements. And today, where we stand, we're at $2,200. So with consistent production, you're getting significant more margin and therefore cash generation going into this new financial year. Inversely, the chrome has been a bit softer. Our prices were down about 10% year on year, as opposed to the 18% up on the PGMs, averaging about $266 per ton. Still a good price historically, if we consider it. But softened a little bit now. We're sitting at about $262, $265 a ton as we speak, which is cyclical going into the winter months, predominantly in Asia and China. There are production cutbacks, but the fundamentals are exceptionally strong around stainless steel. And it's a global story, growing at 5% CAGR, and we feed straight into that. And this Tharisa mine, which is one of the 4 largest suppliers of chrome into that stainless steel industry, accounts for around 10% of Chinese imports. So we're a well-known supplier, credible supplier into that downstream market of ferrochrome and stainless steel, predominantly Asia and China-centric.
Just picking up on that, tariffs, international, USA, China, I'm not talking too much politics, but how has that played out? I mean, you can't always control that, obviously. And how do you see that playing out in the future?
So interesting enough, it's net positive for resources, and you've got to look at sort of the tenure of our investments, which are in some cases multi-generational and decades at a time. And so with the Trump administration coming in, what he's done is created this urgency around security of raw materials. And we've seen all the headlines around rare earths, but it's not just rare earths that are key and critical. And we've got to look at the geography and location of where these resources are situated. And that's where, with Zimbabwe and South Africa, over 85% of the world's platinum resources becomes a key strategic location. So the net effect is that there's a lot more inbound interest in mining, which maybe 5 years ago was a taboo industry to be in, with the whole sort of transformation or greening of economies, and mining had a negative stigma. I think that's changed now, because the reality is you need these metals, these precious and critical metals, to decarbonize the planet. They're the very elements that allow you to achieve the objectives that you require, whether it's renewable energy or cleaning tailpipe emissions, hydrogen production, green hydrogen, and so forth and so on. So it's played out positively, and we see Europe looking at independence. We see China's ahead of the game, North America, the Middle East, and certainly a lot more interest in the space that we operate in.
Fantastic. And you mentioned Zimbabwe, and overall, you've got a pretty aggressive growth agenda. Maybe you can unpack that a little bit more in terms of how investors can think about the timeline, when you're raising capital, how that's going to happen, and just the growth ambition.
Yeah, absolutely. So the second largest geological formation is the Great Dyke after the Bushveld Complex, and we were privileged in 2018 to secure a very large concession in the middle chamber of the Great Dyke, which previously belonged to Zimplats. They released it under the indigenization rules to bring in new entrants. And so we've been exploring that resource for the last 7 years, and in the last 2 years started building and developing the project, which mirrors the Tharisa model quite nicely, in that it's an open pit mine for 10 years and then transitions to underground thereafter. The difference is it's a main sulfide zone, so it's a higher grade deposit than what we used to, but it has very strong base metal credits of copper nickel, and even cobalt. And it's a well-known mining jurisdiction. You've got Anglo or Valterra now, Sibanye, Zimplats operating on the Great Dyke for many decades successfully. So it's really a tier one resource, some 96 million ounces resource. We've proven up the 10-year life for the open pit and are busy drilling the underground to transition from the open pit into the underground operations. So what we've done aggressively, as you say, we say measured and calculated, but because it's such a long period of time, it's 7 years of investment. We've invested or committed $190 million of our own equity to Tharisa Equity. And what that has done is it's obviously given us certainty on the geology. It's allowed us to start constructing the concentrator. We've done a trial mining open pit. So we've completed 100% of the earthworks. We're about 70% of the civil construction, long lead equipment items. About 90% of them have been procured, some delivered and installed on site. And we're busy now with the expansion of a dam that secures water supply for the life of this project, which we say is a multi-generational project, as well as bringing power from the Selous substation, which is a national key point and doesn't get load shed because it brings in power regionally. So we've de-risked this project materially. And from the time that we've bring in the project finance, which we've well advanced on, and strategic investment, we're about 12 to 15 months away from first production. So it's an accelerated timeline. Now, when you look at mining projects, on average, from first discovery to first production, takes around 16 years. We're hoping to have done it in 8 years, a bit longer than we would have liked, but we did have a couple of challenges in between, like COVID and some policy changes in country that required some discussion with the Zim government, who are our shareholders or partners in this project.
I loved reading about your business in your annual report because there's a lot of information and disclosure, and we're seeing this more and more from a retail perspective. I mean, in the US, retail investors have overtaken institutional investors. Be interesting to see when that happens in South Africa. And we're seeing more and more CEOs like yourself. Recently, we also had We Buy Cars and others talking to retail investors. And so I mention that, Phoevos, because I always say our investors are smart. You know, they do the research, they're consistent, they don't knee jerk, and so I know that many of them have also been accessing that excellent information. What they don't know, and so I want to ask a little bit about that, is some of the more personal stuff.
Sure.
So it's interesting when we deal with companies, when you deal with people who set up these webinars or pay accounts and what have you. To my mind, it tells you a lot about the organization. And the person in your team who is dealing with us, super efficient, super engaged. You could, sense really proud of the business. So I'm going to ask you a little bit about the people that you employ in your business, how you choose them, how long you've been working with them. Yeah, tell us a bit more about that.
Yeah, no, absolutely. And it's one of our key strengths is our team. And without the team, we wouldn't have achieved what we've got today. So most of our employees have started from origination, and in fact we had a farewell do just before this event. One of our financial managers is moving on. He was with us for 14 years. And so it really is a family type organization where people take pride and ownership of the business, and we take it personally. So everything, it's not a salary job per se. We take this, and our team takes this business seriously, and we look at the impact and the positive change that we are able to create, and it really drives the third pillar of our benevolent intent, which is empowering futures. And we like to tell the story of our mine in Marikana, adjacent to the infamous Lonmin mine, about parking lots. When we first started, we had a shed where a few people used to park. We've had to build 4 parking lots subsequent to that, and we employ collectively across the various projects over 4,000 people. And when you take that multiplier effect of 10 to 1 is what we use in our industry, you have an impact on 40,000 people's lives a day. And it's a meaningful reminder of the purpose that we have and the and the passion that our team have in this business. So yes, phenomenal team, long-standing, been with us, most of them the key role players since inception. And a lot of the new talent as we've grown that we've brought in love working in this environment because we encourage innovation. We don't like groupthink. We like to challenge convention and innovate with purpose, and our business model is created on that. I always say we don't have the balance sheet to compete with the major mining houses, but what we do have is a little bit of innovative thinking and different approach to challenges. And often we don't have the most or the sexiest opportunities, but we extract maximum value from the efforts that we put in. So definitely one of the key pillars of our business.
Super exciting. And just expanding on that a bit, who becomes a miner? I mean, how did you become one? What qualification, do I need to be an engineer? Do I need to be brilliant at chemistry and physics? Who joins your business?
No, so we often say once you've been in this industry, it's very difficult to do anything else because it gets under your skin, and there's no one day that's quite as similar as the other. So no, you don't have to be a mining engineer. You don't have to be an engineer. In fact, we have senior executives that are running operations that are not technically minded, but have worked in the environment with engineers. So you do need the qualifications for the legal appointments on the mine and the operations. It's a very structured, disciplined business with some different risk profiles to other industries that need to be managed. And safety is one of our core values, and we pride ourselves on our safety records. But yeah, it's about having a sort of relationship with either the commodities or the markets or the actual activity of mining, extracting a mineral from a rock in the ground and seeing it, being produced or converted into a final stainless steel product or an ounce of platinum that goes into the tailpipe of your car that you're driving, that's cleaning the air emissions. So different. So many different touch points in our lives. Your cell phone contains, about 100 different metals periodic table. So it's that education process, and I think it's such an interesting industry because it really is from that extractive base right through to refined product and solutions that the world needs. So yeah, definitely appeals to a broad range. And one of our big drives is educating younger people that are coming out of school and university, and because it's not the most sexy industry or hasn't been. Everyone's looking at AI and computer science, and we're saying, well, we deploy a lot of these technologies because they allow us to become more efficient and automation and moving, human machine interface away from each other by automating. So there's a confluence of so many industries that come together in mining. Yeah.
I was going to ask you about AI and how that's impacted your business, and is it something that you see being more playing a bigger role in the year going forward?
Yeah, absolutely. So, we're transitioning to underground at the Tharisa mine. We have 3 open pits, and we've started with that west underground portal. And a lot of the processes and the equipment that we're choosing is fully equipped and enabled for networking, first of all, because it's a challenge when you're underground, 600 meters underground to get connectivity, but also allows for automation and for robotic clearing of sites after blasting. So definitely has a vital role for us going forward. And we produce massive amounts of data, 24/7, 365 days a year. Every machine, every pump has a curve, has a data profile, and it's putting those systems above it that capture the information and then produce a dashboard, which is where we've come from. But it's now implementing AI and learning tools that allow you to do preventative maintenance and efficiencies and equipment selection for different environments, because it's never quite the same operating environment depending where you are.
You spoke really well about the environmental impact and how important the environment is in your business. We had a question around carbon credits. I mean, is that something you want to expand a bit on?
Yeah, sure. So we with our philosophy, which is to look at value extraction, we've developed our redox flow battery, which is an iron chromium battery, which is basically a long duration storage. So it doesn't compete with lithium ion batteries that we all know very well. This is grid scale, sort of 100 megawatt plus type technology. So part of our carbon offset is looking at technologies. We've got a wheeling agreement for renewable energy that comes in 2027. It's wind and solar through one of the traders, energy traders, that offsets about 80% of our carbon-based consumption, be it diesel or Eskom. And then our energy storage, we hope, will be able to deploy out and then be able to generate carbon credits from that technology because it is a green solution storing renewable energy. We also have been applying for our own 40 megawatt solar facility adjacent to the mine. It's an off-balance sheet project where we sign a 15-year power purchase agreement, a PPA. We're going through the regulatory process of getting that approved. There are challenges with transmission and distribution of renewable energy at various sites on the grid. So we're working with Eskom on that as we speak.
And where's the name come from, the company's name?
So it originated with our BE partners, the ladies grouping. Their name was Tari, which means strength. And we put the SA as South Africa on the end, so Tari SA, and it ended up becoming Tharisa as a name. So it stuck with us as our name.
Nice.
From origination, yeah.
And what are you doing for Christmas? Spending time with family, end of year? You shutting down? What are your plans?
So as I said, we run straight through, but I fortunately do have the opportunity to take some leave with the family and have some good respite and recovery for the new year, because we have a lot on the go, as you know, lots with the underground expansion, with Karo, and lots of activity with the day-to-day requirements of producing PGMs and chrome as well.
Fantastic. So to those listening, we'll be publishing a blog in a couple of hours and attaching this webinar to it, and also some of what we've extracted from the excellent information that's publicly available that Phoevos and his team have been sharing the last week or two. So Phoevos, thanks very much. You're definitely, to my mind, an equity to watch. I know that there's lots of interest in the community. We look forward to following your story as it continues to unfold. And thank you very much for taking the time to chat to us, and wish you the very best.
Thank you, Carl, and you too. And goodbye to all of you.